Hey everyone, welcome back to this week's Teaching Thursdays. We're going to cover something which we like to call 4 pins. We actually plan on doing a webinar on this, and we're looking to maybe start doing maybe like one webinar a month. Kind of provide just some more content, some more information and resource to you as a consumer and the investor, of course, because we just feel in providing just great information to you guys. We also have our pin consulting, which is attacking your personal investment needs, and we also feel that there are power in numbers, and so that's where pin consulting comes in. We believe that 2 heads are better than 1. Even if you're an investment group, we consult with the group. We don't provide direct, buy this, buy that. However, we do teach you about the basics, education, as well as trying to find out what type of investor or investment group you are and what ways can fit into your style. If you're conservative or if you're aggressive, what types of investments or investment styles or strategies are out there, particularly that fit your style. So that's why it's your personal investment needs. And that's why with the 4 pins, we're actually going to cover what the 4 pins are. That's something new that we're starting here at Black Market Exchange. And of course, with your 4 pins, that's going to help decide what type of investor you are or what areas that you fall in after your risk assessment. So with 4 pins, you're going to have, of course, 4 items. You're going to have the P, which is going to be for prolonged. The I is going to be for income. The N is going to be for now. And the S is going to be for short. So of course you have P, I, N, S. So the 4 pins. Prolonged, of course, is going to be your long-term investment. So you see here the word long is right there in the middle. So this is going to be your long-term investments. Now with your long-term investments, you're looking at something that you're going to get today and you plan on holding for a while. There's something called emerging markets or international, and these are things that just have some growth potential to them. There's also growth stocks. So if you think about if there's a certain industry, but then you kind of have this new company coming along, they have plenty of growth because those other companies have already reached their peak. So you're trying to find those diamonds in the rough, and that's going to be your prolonged. You're looking for something that you plan to hold for a long time. Next, you're going to have your income. So income investing, of course, is associated with dividends. So income, that's going to be your dividend. And of course, when you're thinking about your prolonged investing, dividends are probably going to be somewhere in your long-term strategy as well. Now, one thing about the pins, all of these things can be brought in together because, of course, it's going to suit your personal investment needs. You might not use some of these strategies, you might use all of them, but they all can be intertwined in together. So with income investing, you're going to get dividends. Those are specifically investing in stocks that pay dividends. A lot of the big name companies, they start issuing dividends because the stock might plateau. The price isn't moving as much as it used to. So to keep investors happy, they issue a portion of the company's profits. And of course, your dividends are going to, once a company has their net income, you can actually look at a company's balance sheet. They have their 10Q, which is their quarterly reports, or a 10K, which is their annual income reports. And simply, you're just looking for what the net income is. What's their bring home profit, and that's what the dividend is going to be decided off of. And the board of directors is actually who decides what the dividend is. Should we increase the dividend? So on and so forth. And we'll get into more information with that later. We actually have a video on dividends, so you might want to check that out to get some more information. Next, you have now. Now is going to be your trading. So a lot of people have heard of the term day trader, trading, etc. So your now is like you're buying something at 8 in the morning, you're selling it at like 10 in the morning. You're getting in, you're getting out. It's something that's right now, right now. That's why it's called day trading for a reason. So this is for your, this is most likely going to be associated if you really have time to kind of focus on what you want to do. You really kind of work with charts pretty well to know what are your entry and exit points. This is particularly when you have a little bit more time on your hands. A lot of people might go to work. They can't really watch the stock market be active as they need to be because when you're day trading, a lot of times you might buy something at $50.55 and sell it at $50.65, and that's all that you needed was a 10-cent change. But depending upon how much you invested, you might have come up $1,000. So that's kind of what the now is associated with your day trading. And then lastly, you're going to have short, which is just your short term. So of course, when you think about short term in our with our risk assessment, we actually ask you, what do you consider short term and what do you consider long term? Well, by definition, when it comes to investing, short term is anything that is 1 year or less. Long term is anything that is over 1 year. So if you buy, and this is for tax purposes, If you buy a stock or any, financial security for that matter, you buy it and you sell it within a year, it's considered a short-term investment, and that actually has a higher tax rate on it than a long-term investment would. And the same thing is going to go with your dividends. Your dividends is pretty much going to be taxed the way a short-term and a long-term is. It just depends on how long you hold it for. Like some people do what's called, a dividend capture, where they try to get that. Like immediately, but if you're holding the stock for a long time, you're going to be taxed differently. And that's known as what's called, there's non-qualified and there's qualified dividends. So, make sure you read up on what those mean. So in essence, for your 4 pins, you have a prolonged investment strategy, an income investment strategy, a now investing strategy, and a short-term investment strategy. So to develop your personal investment needs, you need to find out which areas do you fall in. Now, if you're a conservative investor, something that, you don't mind the little gains over time, then you might want to look more at the long-term and income investing. If you're more of an aggressive investor, you might be looking more towards the now and the short term as well. And, just as we mentioned that some of these coincide with each other, if you do dividend capture, which is you buy a stock before the ex-dividend date, make sure you check out our video on dividends to know what these terms are. If you buy a stock and you get it before the ex-dividend date and then you sell it maybe that day or the next day later, you're still going to get the dividend even though you don't own the stock when they pay out the dividend. That's going to be considered a short-term investment, even though it's a variation of income investing. That's also kind of what it would be associated with trading. You have like swing traders, day trading. Trading can even be over the course of like a week. No, mostly it's associated with over 24 hours. But all of these things can kind of mix in together. So, if you're, like I said, if you're conservative, you might be looking at the prolonged long-term investing as well as income investing. If you're more aggressive, you might be looking at short-term and day trading as well as mixing the dividend capture. If you're kind of in the middle, you might be mixing everything together. It just really depends on what you feel is best for you as an investor. So just make sure you remember when you're about to start investing, find out what type of investor you are. Make sure to take our risk tolerance assessment, and you can find out if you're more conservative, if you're moderate, if you're more aggressive. And then look at these 4 pins and decide which style would be best for me. Am I somebody that likes to get something and I don't mind, I'll take, a lower percentage annually as long as I know it's guaranteed? Or am I more of an aggressive investor and I want big gains that even have a big risk to them as well? So you just find out what's best for you and just always think when you're investing, what are my 4 pins? What are my 4 pins? What are the strategies that I want to use? So make sure you check out our videos and see you guys later.